You are witnessing the impossible, a paradox that defies the very laws of financial physics. Last night, Washington dropped a bombshell. U.S. GDP hit 4.3%, the strongest growth in 2 years. According to every mainstream economic textbook, this should have been the death blow for gold. The dollar should have soared to the heavens, and gold should have been crushed under the iron heel of rising interest rates. And for exactly 15 minutes, the script played out perfectly. Gold went into a free fall, shedding $60 in a guillotine move that wiped out thousands of retail buy orders. The crowd fled in a panic, convinced that the $4,500 bubble had finally burst. But look closer at the tape. Why, at that exact war zone of 4,500, did a massive, silent, and cold-blooded buying force swallow every single sell order? Why, when the GDP numbers looked their brightest, did gold stage a violent reversal, piercing through the 4,500 ceiling like an unstoppable arrow? The answer does not lie in Washington. It lies in Beijing. Last night, while the world was hypnotized by America's hollow GDP figures, the Eastern Dragon was executing a move of total subversion. Welcome to this special investigative report by News Finance. I am your guide through the shadows of the global money flow. Let me perform an autopsy on that 4.3% GDP figure for you, so you can see the rot inside. As a hedge fund manager, I don't look at headlines. I look at the internal organs of the report. The reality is grim. American consumer confidence is crumbling. Durable goods orders, the very backbone of industrial production, have plummeted by 2.2%. So why is the GDP so high? Because the U.S. government is spending money like there is no tomorrow just to maintain a veneer of prosperity. This isn't growth, it is a forced blood transfusion from public debt. But while the retail crowd was being distracted by these synthetic numbers, smart money was tracking a different ghost, the People's Bank of China. Satellite data and customs reports reveal a chilling truth. China has been stealthily accumulating gold for 13 consecutive months. Even as gold hit all-time highs, they did not stop. Why? Because Beijing has looked through the smoke and mirrors of America's $36 trillion debt trap. Follow the money. Last night, when gold dipped into the 4450 zone, massive iceberg orders were triggered. These were not the orders of retail traders. These were sovereign reserve orders. China is trading paper dollars for physical gold bullion. They are building a great wall of gold to shield their economy before the American financial storm makes landfall. And China isn't just buying gold, they are executing a scorched earth strategy. In the last 48 hours alone, they dumped over $11 billion in U.S. Treasury bonds. This is a mass exodus. When your largest creditor starts throwing your IOU notes into the trash, you know exactly what is coming next. Connect the dots, and you will see a terrifying picture of the collapse of the old world order. In the West, Donald Trump is creating an unprecedented political earthquake. He has openly challenged the Federal Reserve, the institution once considered the holy sanctuary of currency independence. His message is blunt: either pivot and cut rates to save the economy, or step down. When the Fed loses its independence, the U.S. dollar is no longer a safe haven. It becomes a political pawn, and that is the spark for gold's fury. In the East, Beijing is weaponizing this instability. They are leading the BRICS nations to create a new settlement system. Their strategy is simple: the weaponization of gold. They know that U.S. public debt has passed the point of no return. The interest payments on U.S. debt now exceed the entire national defense budget. This is a spring compressed by desperation. China is standing on the other side of the battlefield, quietly gathering every ounce of gold possible for the moment that spring finally snaps. Imagine this: when the dollar is politicized, when U.S. debt explodes, and when China introduces a currency backed by gold, The $4,500 mark today will look like a quaint starting point. We are in a war without bullets, where the weapons are not nuclear missiles, but 24-karat gold bars. They, the manipulators, want you to believe the dollar is still strong, so they can exit their positions safely. But we, the smart investors, must see the current flowing beneath the surface. The $4,500 barrier has been conquered. But do not misunderstand me. This is not the time to celebrate or take early profits. Technically, we have entered a vacuum zone. There is no more historical resistance. Above us is an open sky. When the algorithms of the major banks fully recognize the structural collapse of the dollar, a mass buy-stop sequence will be triggered. This will be a short squeeze of biblical proportions, incinerating every short seller on the planet in an instant. The next target, 4,600, 5,000, it is no longer science fiction. With China aggressively increasing its position and Washington's policies accelerating the erosion of trust in the dollar, we are entering a new financial epoch, an era where gold is no longer jewelry, but the only life jacket on the Titanic of fiat money. Here is my final warning to you. Do not be the person standing on the tracks when the high-speed train arrives. Last night, thousands lost everything because they believed in that 4.3% GDP lie. They sold their gold at $44.50, and now they are forced to buy it back at $45.20 with bitter regret. Do not sell the insurance of your life for a few minor tremors. Follow the footprints of the Eastern Dragon and the smartest money in the world. The market is never wrong. Only those who misread it pay the price. The great game has only just begun. Which side will you choose? The side of paper notes losing their soul, or the side of the eternal metal? Don't forget to subscribe and turn on notifications, because in the coming days, this battlefield will only get more brutal. I will be here with you, stripping away the masks of Wall Street one by one. I'll see you in the next investigation. Stay sharp and hold your ground in this financial storm. October 2025. A suffocating tension hangs over the APEC summit in Kuala Lumpur. The world holds its breath as Donald Trump and Xi Jinping face off in a high-stakes standoff. Retail investors, the crowd we call the small fry, bet their entire portfolios on a chaos scenario, expecting a geopolitical explosion to send precious metals into the stratosphere. But the moment the handshake was televised, a massacre ensued. And it didn't start with gold. Silver was the first victim led to the chopping block. While all eyes were fixed on gold, silver, the poor man's gold that serves as the industrial heartbeat of the planet, was hammered down by over 5% in a single New York trading session. This wasn't a standard correction, it was a calculated free fall. Retailers fled in a panic as massive red candles sliced through every technical support level. They fell for the media trap, the narrative that the Kuala Lumpur Peace Accord signaled an end to instability, stripping silver of its reason to exist at premium prices. In an instant, silver hit its peak and was violently dragged down to the $30 zone. A historic fever turned into a bloodbath on the COMEX floor. Why would a peace deal be a death sentence for silver? The answer isn't in the Bloomberg headlines. It's buried in a classified memorandum, the Kuala Lumpur Joint Arrangement. A backroom deal turned the white metal into a sacrificial pawn for a higher power play. While the paper price was being decimated on your screen, behind the curtain, physical silver was being drained from vaults at a terrifying velocity. Smart money was casting a massive net, using the crowd's misguided euphoria as bait. To understand why silver was executed to set the precedent, we must look at the core of the November 4, 2025 Kuala Lumpur Agreement. One clause sent shockwaves through the elite. China agreed to lift export controls on rare earth elements, the oxygen for the U.S. defense and semiconductor industries. In exchange, Washington greenlit the export of NVIDIA H200 AI chips to Beijing. Think logically. Silver is the essential component in solar panels and EVs, sectors China dominates. When trade risks were neutralized by this chips for minerals swap, the paper-driven need to stockpile silver for supply chain protection vanished. The retail crowd panicked, believing the green energy era was over under Trump. But what is the truth? The whales behind the major hedge funds were using iceberg orders, massive buy orders broken into tiny pieces to hide their footprint, to quietly accumulate silver at this massive discount. They are preparing for a scenario you haven't been told, the explosion of next-gen AI infrastructure, which consumes 3 times more silver than legacy technology. This is a global shareholder blood transfusion. They suppressed the price with political noise to strip the weak hands of their assets, preparing for the spring to coil before the AI demand hits an unbreakable ceiling. Silver was the spark. Gold was the forest fire. Immediately after silver was pushed into the abyss to trigger a domino effect, gold, the king of assets, was next on the hit list. To understand why gold collapsed from its $4,500 peak to below $4,300, we have to follow the money along a trail that leads straight to a man the public barely understands, Scott Kenneth Homer Bessent. It is no accident that Trump chose a former George Soros protege as his Treasury Secretary. Bessent is not a politician. He is a market architect, a master of the invisible cage. He spent decades learning how to break currencies and manipulate global flows from the shadows. Now he's been given the keys to the most powerful weapon in the world, the U.S. Treasury. Investigative data reveals that upon taking office, Bessent initiated Operation Dollar Fortress. This wasn't just a policy, it was a declaration of war against hard assets. They didn't just sell gold, they used the weaponized interest rate to make gold feel like a burden. They created a reality where holding a bar of gold felt like holding a stone while the dollar fortress was handing out bricks of risk-free cash. This is a nation-state-level liquidity swap. You are watching a great betrayal of the gold standard dream. The U.S. needed China to keep buying its debt to fund the $38.1 trillion deficit, and China needed the U.S. to ease the AI chip blockade on NVIDIA. Gold and silver were suppressed to serve as the industrial grease for this secret deal. They are manufacturing an illusion of stability, a temporary peace designed to trick the crowd into thinking the era of safe havens is over. They want you to believe the dollar has been fixed so they can accumulate the gold you're throwing away. They are burning the white and yellow metals to keep the furnace of the debt-based system running for 1 more year. Let's perform a forensic autopsy on the Trump 2.0 economic engine. Scott Bessent is driving the 3-3-3 policy, 3% GDP growth, reducing the deficit to 3%, and boosting oil production by 3 million barrels a day. It sounds like a dream for the dollar and a nightmare for gold, right? But look at the hard reality. U.S. national debt has hit $38.1 trillion. Every 100 days, the U.S. adds another $1 trillion in debt. A 4.5% interest rate means the government is paying a staggering amount of interest annually, a figure that now exceeds the entire national defense budget. The strong dollar is a hall of mirrors sustained by temporary political truces like Kuala Lumpur. Trump wants a strong dollar to force other nations to buy American, but the debt system cannot survive high interest rates forever. This is an irreconcilable internal contradiction. Silver and gold are currently like a spring being compressed by a titanic force called monetary policy. The harder the compression, the more violent the eventual release. When the Kuala Lumpur Agreement inevitably frays, and it will as new tariff barriers rise in 2026, this spring will unleash its full energy. Do not be deceived by the red candles on your COMEX screen. The plunge of silver to the $30 zone and gold below $4,300 is not the end. It is the starting gun for a massive financial restructuring. The smart money is cleaning the market, flushing out the weak hands to prepare for an unstoppable surge. When the faith in artificial peace evaporates and the $38.1 trillion debt burden begins to choke the U.S. economy, the world will realize that no handshake can replace the intrinsic value of physical metal. The next target for silver isn't just the old high, it's the $50 to $70 range, while gold will set its sights on the $5,000 milestone. A final word of advice: do not sell your soul at this technical support level. The whales are waiting for your panic to complete their final accumulation. You must choose: be a victim of the Kuala Lumpur Compact or a partner to gold and silver on their journey to a new peak. The decision is yours. Hold your ground. The spring is about to snap.